Welcome to This Explainer. Today we are dissecting one of the most unbelievable resurrection stories in the biotech world right now. We're talking about Amylyx Pharmaceuticals, ticker AMLX. Let's jump straight into the science and that hard Wall Street math behind a stock that quite literally just came back from the dead.
Okay, so to truly grasp where Amylyx is heading, you absolutely have to understand where they've been. You see, the ghost of their previous flagship ALS drug, Relievrio, still looms really large here. That drug completely failed its phase 3 trial and got pulled from the market. Now, if you follow this space, you know that in biotech, a high-profile failure like that, it's usually a death sentence. But instead of folding, Amylyx executed a massive, aggressive pivot. Their entire future right now rests on a completely new pipeline. We're talking about Avexitide, AMX0035, and a really early-stage ALS compound called AMX0114.
Now, the main catalyst that yanked this company back from the absolute brink is Avexitide. This is a drug specifically designed to stop excessive insulin secretion in patients dealing with post-bariatric hypoglycemia, or PBH. For those who might not know, PBH is a genuinely severe condition causing huge blood sugar crashes, cognitive impairment, and even seizures after weight loss surgery. Well, in their recent phase 3 Lucidity trial, Avexitide just delivered a staggering 55% reduction in those hypoglycemic episodes compared to a placebo. I mean, wow. It's basically the holy grail for a biotech setup. You've got strong efficacy, a terrible disease to treat, and incredibly clear, undeniable biological data.
To really wrap our heads around why Wall Street reacted to that 55% reduction with such absolute ferocity, we have to look at the market landscape. Right now, Amylyx estimates there are roughly 160,000 people in the U.S. currently living with BH. And guess how many FDA-approved treatments there are specifically for this condition? Zero. None. It is a total white space. So here is the crucial takeaway. Because of this massive unmet medical need and literally no direct competition, analysts are estimating U.S. peak sales could actually reach $2.2 billion. For a company that Wall Street had essentially written off as dead just a little while ago, that is a staggering, game-changing commercial opportunity.
But, how does all that potential actually translate into hard Wall Street math? Well, right after that data dropped, AMLX's market cap absolutely exploded to nearly $4 billion. So they aren't some tiny, ignored, speculative biotech anymore. The market is clearly already pricing in a massive amount of future success here. Look at it this way. In a bear scenario, where they only hit, say, $500 million in peak sales, the stock obviously has clear downside risk. Even a $1 to $1.5 billion base case makes today's price look, honestly, fully valued. It's really only in that $2 billion plus bull scenario where we see a viable, realistic path to a $6 to $10 billion market cap. So the real question isn't whether the trial was good, it was great, but rather how much of that $2.2 billion dream is already baked into the share price today.
So how exactly are they going to fund the long journey to actually get there? Right now, Amylyx is sitting on approximately $250 million in cash. And that is a really big deal because it gives them a solid runway all the way into 2028. If you've been around the biotech block a few times, you already know the dreaded routine all too well, right? A company's stock pops on some amazing phase 3 news, and then literally the very next morning, management announces a massive stock offering, instantly diluting the shareholders who just celebrated the win. Well, Amylyx actually has breathing room. They don't need to immediately raise huge chunks of capital. That leaves the current investors' slice of the pie completely intact as the company marches toward a potential commercial launch in 2027.
Now, while Avexitide is absolutely the star of the show right now, a $4 billion valuation practically demands that we look at the broader pipeline. They do have AMX0035 for Wolfram syndrome, which actually just produced some positive phase 2 data showing stabilization in pancreatic function and vision, which sounds great, right? But we really have to apply some objective caution here. Remember, this exact compound failed in a previous trial for a completely different disease. Because of that baggage, we just can't assign it a massive premium right now. They've also got that early-stage ALS compound showing no serious adverse events at low doses. But realistically, for right now, you should probably just consider that strictly as free optionality. Definitely not the core reason you jump in and invest today.
And honestly, all of this perfectly illustrates the classic biotech asymmetric setup. You are balancing this enormous sky-high upside against very real, very severe risks. The bull thesis is undeniably compelling. I mean, FDA approval could lead to a multi-billion-dollar specialty pharma titan with really substantial recurring revenue. But, the bear case is just as stark, because as we all know, a great phase 3 result does not automatically guarantee a blockbuster drug. They still have to navigate tricky FDA label risks, and then there's the massive, incredibly expensive hurdle of actually building out a commercial sales infrastructure entirely from scratch. With the stock already flying this high, any tiny misstep in commercial adoption is going to mean some massive valuation compression.
So breaking it all down, the risk-reward setup here is actually pretty clear. For efficacy and speculative upside, those easily get a 5 out of 5 stars. The biological data is just undeniable. The balance sheet sits at a really strong 4 stars, entirely thanks to that $250 million cash runway we talked about. But valuation and commercial execution, those are lagging behind at about 3 stars, simply because so much wild optimism is already priced in, and they still have to prove they can actually sell the drug. The big takeaway here? This asset is fundamentally de-risked compared to where it was last month, making it an incredibly interesting speculative buy or hold. But conservative investors, you probably want to wait for a bit of FDA clarity or some structural weakness in the price, rather than aggressively chasing a massive one-day surge.
Look, Amylyx has undeniably graduated from a risky, prove-it biotech into a potentially legitimate commercial pharmaceutical story. That 55% reduction in the trial literally changed everything for them. If they execute this flawlessly, today's $4 billion valuation might actually look incredibly cheap a few years down the line. But if expectations start outpacing reality, the volatility is going to be absolutely brutal. So I'll leave you with this thought to chew on. Based on the hard data and the market's extremely aggressive pricing right now, is Amylyx truly a multi-billion-dollar pharma titan in the making, or is it just a phoenix flying a little too close to the sun?